Salam everybody, this is Investor Sheikh back at it again with another video. And today's video is going to be about my best and worst investment in my stock market investing journey. Now, I've been investing in the stock market for about 4 years now. So I have experienced some highs and lows. Whether that's investing in the right stock, going up 100, 200, 300%, or investing in a stock at its peak only for it to go down 40 to 80%. Now, when it comes to making bad investments, I see it as a learning experience. So you learn from your mistakes and you end up being a better investor over time. Now, when it comes to investing, my motto is you win some and you lose some. Meaning, you will profit on some stocks, but you will end up losing money on other stocks. Now, with that being said, let me tell you my best investment. And that is NIO, ticker symbol NIO. So NIO is an electric car company that is based in China. And it is seen as the Chinese Tesla. So looking at the stock price now, it's at $55.38. So, however, when they first IPO'd, they were at $6 a share. So I bought shares of NIO when they first IPO'd, and then I noticed the stock price dropping. And this was at a time when there was a bankruptcy scare in NIO with fears that they would go bankrupt. And I made the bold decision to actually buy more shares into NIO at between $2 and $3. And at that time, I also watched an interview with the CEO of NIO, who was confident that NIO was going to succeed, given the negative news surrounding it. So of course, with all that fear involved in that stock, many people were selling. But I actually decided to buy more shares. And in the end, it did pay off, since it is in the 50s. But mind you, I did sell a majority of my position, mainly at the $15 price. And I kept a small position, and I'm letting it ride. So to this day, I'm still holding a small position in NIO. Now, as to whether there is more room left to grow for NIO, I say that there is. Just give it a few more years, and we may see this stock at a much higher level than it is now. Now, that's my best investment. My worst investment was actually a dividend paying stock, and it's known as General Electric, GE. And yes, it is Sharia non-compliance. So, when it comes to GE, I started building a position in GE in 2018. And at that time, well, I didn't know back then, but this is what we would consider to be a falling knife. So back in late 2016, it was in the 30s, but then it proceeded to dip. Well, you started to see a negative downtrend over time. So I bought it in late 2017. So I bought shares of GE when it was in the $17 range, thinking that I was gaining a good deal since it was previously in the $30 range. But since I bought shares at this price, it continued to go down even more. It went as low as $7. See, at that moment, this was when GE announced that they were going to cut their dividend to 1 cent per share, and they were paying a pretty good dividend prior to that announcement. So it's no wonder that this stock went as low as $7. Now, yeah, it does sting a bit when you first started buying shares at $17, only for it to go down to $7. Now, given the lowering stock price and the dividend cut, I decided to take the L and sell my entire position in GE. And I did lose a lot of money from this investment. But what I did was a pretty bold decision. And I decided to use the money that I had left with my position in GE and to invest it in Tesla. And that was back in 2019. And that was probably the wisest decision I've ever made. Pretty much redeemed this investment that I made in GE, because to see your investment drop from $17 to $7 is painful. It really is. But that was a valuable lesson for me, to not invest in a falling knife. Now, a falling knife is basically a stock that is continuously going down over time. And I'm actually glad that I took the L in selling and ended up selling GE, because if I were to still hold on to it to this day, I would not be able to break even on my original investment. And sometimes you have to realize, if a stock isn't performing so well, you don't necessarily have to hold on to that stock. Now, it's okay for you to sell at a loss if you know that you can find a much better stock to put your money into. So, with that being said, you will make mistakes over time. You will invest in a bad stock. You may buy at a very high price, or you may have bought the stock prior to some bad news about the CEO caught in a scandal or something, which would then cause the stock to go down. Now, you have to understand that these things are not in your control, so it's not your fault if the stock price goes down. But let that be a lesson, is to do your research on the company before putting your money in the stock. Now nowadays, we see a lot of YouTubers talk about their stock picks, whether they're buying or not buying, and you will see many people blindly buying these stocks just because their favorite YouTuber is talking about it. And then once the stock price goes down significantly, all of a sudden they want to blame the YouTuber for them losing money on this trade, when really it's their fault for not doing the proper research and just blindly buying the stock because so and so made a video about it. So there's a reason why many YouTubers are saying that they're not financial advisors. It's because they don't want to take the blame if any of you lose your money investing in the stock because they made a video about it. So, all in all, the stock market is a great tool to build wealth over time, but you have to view things in the long term. Now, yes, you may do some swing trades. You may buy low and sell high for certain stocks, but there are some stocks that are just worth keeping for years and years. For example, Tesla is an investment that I believe is worth keeping for many years. And then there are some stocks. So, with that being said, this is Investor Shake checking out.